Fed tapering might not be bad news for gold. Vince Lanci tells us why next. Vince Lanci, thanks for being with us. Now let's talk Fed. Their two-day policy meeting starting this Tuesday. Everyone's waiting to see what will come out of it. Will they taper? Will they not? What are your thoughts, and what could it mean for the metals?
Well, I mean, in general, I guess the most highly searched Google word taper is taper now, and everyone's worried that if we taper or incorrectly taper, we're going to depress the economy in general. What it does show, it shows an incredible amount of trust in the government's managing of its economy. Now, that's a fact. The markets are trusting how Ben Bernanke is handling the icebergs that we've been navigating through. I believe that because we are in essentially or based on increased consumer demand, you're looking at money running into assets that offer the highest yield. Bottom line is, what will a taper do? A taper will begin an untapering. So we're just going to be cycling out of this, in and out of easing and non-easing until we actually have a real economy. So I think a taper is meaningless because 6 months from now we'll be untapering if that happens.
So Vince, are you saying that everyone should not be rushing to the conclusion that if the Fed does taper, it's not necessarily bad news for gold?
No, they should not. In fact, you might see gold do the opposite. I'm not making that case, but gold has taken such a hit over the last couple of months that if you were to look at it as a tapering statement comes out and the market sees that as an appropriately tapered or affected tapering, you could see stock.
ECB is falling behind its contemporaries in this foreign exchange war.
Countries that have an easier time raising or weakening their currency, or that need to more desperately, like your exporting countries, your emerging.
And Vince, everyone's kind of looking at the emerging market currencies now and how they might be bullish for gold. But is there a currency that you feel we should be paying attention to that could really impact metals?
Well, there are two currencies that come to mind. One that I have no idea or don't understand why it's impacting gold, but it is moving in tandem with gold, and another which makes sense. The first one is the yen. It would seem that as of late, the dollar-yen relationship has a high correlation with the stock market and an inverse correlation with gold. You know, the yen, gold drops $30 because the yen moves 100 basis points. But the more I think legitimate fundamental currency that matters is Australia. Australia is not agriculture, but an exporting economy, and gold's a big part of that. And they are a satellite of China.
Vince, before we get to the daily gold chart now, let's look at Deutsche Bank, another bank that's gone on the record saying that they're looking at gold prices to remain in more subdued territory. Yet they also announced last week that they were planning to launch a new gold vault in Singapore capable of holding 200 tons of gold. Do you think this is a mixed message? Does it make sense?
Yeah, seemingly a contradicting statement. But just to address the super cycle concept and the fact that everyone is now piling on the bear side, there's nothing I can disagree with here. We've had a 10 to 15 year bullish run, but anybody who's banking on Chinese growth or China's economy turning into a consumerist economy overnight, I think is grossly making a mistake. There's no switch that's going to be hit that's going to save the world because China's going to start buying, Chevrolets. So I don't think the economy, the world economy, is going to be saved by China becoming a consumerist economy. Is that bullish for gold? Is that bearish for gold? I think it's less bearish for gold than stocks. That's definitely for sure. So if you think China, all of a sudden, a country that has its wealth portable, that has a revolution or regime change every 50 years, is going to become comfortable buying iPods countrywide, not just in the urban areas, then sell gold. If you think that China can't hit a switch and start buying the things they make, then I would say sell stocks and don't sell gold.
Vincent, if we pull up the daily chart for gold now, we see a wedge formation forming. What could this mean for the yellow metal?
Well, it's been talked about by many people recently, and it's a legitimate formation. A wedge under the 1500 area, which is where we failed at most recently on a daily chart. You'll see that we have a descending line going way back a couple months. That's about twice as long as the ascending line coming from the recent low about 3 weeks ago. And that's usually almost always a continuation pattern. And that's a chartist to look at that and say that in and of itself is bearish. So things don't look like we're getting above $1,500 anytime soon. As a trader, we were just discussing this in-house. Would we be comfortable buying dips or buying strength? And the answer is buying dips. So to us, that means we don't think there's going to be a lot of follow-through momentum to the upside.
So your key support and resistance levels for gold, Vince?
Yeah, it seems like the round numbers matter now. 1,500 is the absolute upside to any short covering rally, in my opinion. 1,400 seems to be really establishing itself as a consolidation area that we cannot get above. I see decreased volatility in the market to the upside and increased volatility to the market to the downside. But right now, if we break down below this wedge, if we don't test the recent lows, then we should be okay. If we do test them, I don't think they'll hold. So I would be very careful below the recent lows in the 1330 area.
So if you're saying they don't hold, we could go into the 1200 territory?
Yeah, I don't see us having a double bottom that lasts long. If we go back down there, I don't think it'll hold very well. But I'm not really sure right now what gold is going to do. Again, 5% of our portfolio is in gold, so we're not that concerned about it as in the macro picture. But looking at the commodity itself, we continue to be long it and would buy again in the 1200 area. But we would aggressively sell between $1,450 and $1,500.
Vince, that's all the time we have today. Thank you.
Thanks for having me.
Thanks for watching this edition of Reset. Email us at newsfeedback@kitco.com. Thanks for watching.